Salesforce or CRM stock is down over 30% from its recent high, trades around 6 to 7 times forward sales. A lot of folks are asking, is CRM or Salesforce a cheap SaaS stock? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Salesforce. So Salesforce aims to become the #1 world's enterprise cloud software applications company. So for a little background, what really got Salesforce off the ground was its focus on cloud-based customer relationship management software. This focus on monthly subscriptions enabled many smaller businesses that couldn't otherwise afford multi-year on-premise deals with large upfront payments. Salesforce has scaled up to become the #1 CRM software provider in the world, beating out and taking share from its rivals. And when you see a chart like that saying, hey, we are taking market share year after year from players like Oracle, SAP, Microsoft, Adobe, that does suggest that you have a very strong, if not unrivaled, value proposition. Now, management quickly realized there's a lot of opportunity to cross-sell different cloud-based software applications beyond those tied to customer relationship management, like sales and services. What about marketing? What about e-commerce, analytics, communication? You tie all these things together, maybe you're looking at a $250 billion addressable market, so a huge pie that they could be tapping into. So over time, Salesforce leveraged its growing organic growth through its CRM business to acquire new businesses that gave it exposure to faster growing markets. You can see some of the acquisitions here, like ExactTarget for $2.5 billion, Demandware for nearly $3 billion, MuleSoft for $6.5 billion, and Tableau for $15.7 billion. More recently, they completed their acquisition of Slack, a channel-based messaging platform, for nearly $28 billion through a combination of stock and cash. Now, another appeal of this acquisition strategy is that it lowers customer churn, i.e. it's harder for a customer to rip out a CRM solution when you're also using Salesforce's analytics and marketing tools. So this drives increasing profitability because your customers ultimately are stickier. The lifetime value of that customer increases over time, the stickier it is. This cost of this approach, however, is that the supply of shares is also up significantly over time. A lot of folks like to look at the top line and say, hey, this business is growing very quickly. It's doing great. But you also need to consider the bottom, the shares outstanding as well. So you look at, for example, revenue since fiscal 16, revenue's up 4x, around a 26% compound annual growth rate. But revenue on a per share basis is only up 2.6 times, which is a high teens growth per share basis. So this is definitely something investors need to consider, this approach of issuing stock for all these acquisitions to drive their growth. So how should we think about CRM's valuation? First, a quick plug. If you're interested in joining a community of fellow investors looking to learn and find exceptional companies for both good and bad times, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click Join the Journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Unrivaledinvesting.com, click Join the Journey. If you enjoy videos like this, please make a point of hitting that thumbs up, hit that subscribe button. And so it's hard to size up if Salesforce is truly unrivaled when it has so many different products. The bundling approach, however, leading to multi-cloud adoption probably does make them even stickier and increases their relative value proposition. So even if they're not necessarily unrivaled, which I'm not ruling out, they still have a very strong value proposition and could continue to win market share. Now, management's guiding to around $50 billion plus in revenue for fiscal 2026 and adjusted operating profit of around 20% for fiscal 23. That's actually this year because it ends in January 2023. But that 20% adjusted profit margin is sort of a phony baloney number because over half of it is tied to stock-based compensation. So really, the true adjusted operating profit, in my opinion, is closer to 10%, what they're guiding to, because this amortization of purchased intangibles is arguably a true non-cash expense that's also not dilutive. Now, with a 73 to 74% gross margin, maybe they can get to 25 to 30% non-diluted profit margins in the future, currently around 2%. So thinking about that, maybe that gets to 25 to 30% when you're considering valuing this business. Looking at Salesforce on a per diluted share basis. We're looking at maybe high teens growth from here. For example, their most recent fiscal year, which they call out as exceptional, was really 19% growth on a per share basis, on a revenue basis. And they need to prove that they will actually scale this business profitably, in my opinion. Maybe get to a real operating profit of 25 to 30%, not adding back significant stock-based compensation in time. So that is, I'd argue, how investors are considering valuing this business. Looking at a range of possibilities, a range of end multiples, and you're looking at less than, I'd argue, 100% upside potential over the next 5 years. I'm saying, hey, what if you're talking around high teens, around nearly 20% growth rate, an end multiple, low 20 times earnings for assuming 30% real profit margins. And that doesn't get you to that 100% upside, even when you factor in that they are going to be generating some cash that will be accruing to shareholders. So my personal view is maybe revisit this if it were to continue dropping, maybe below $160 a share. Now, of course, this is just a hypothetical framework where I'm trying to pencil out what's the potential upside. Of course, the stock price can go way higher or lower depending on the execution and sentiment. So I'd absolutely love to hear your thoughts. This was my first time sort of diving into Salesforce. If you have a perspective on the company, would love to hear it. If you're like, no, Daniel, their actual organic growth can be at least 15%. So maybe those acquisitions really boosted above that. I'd love to hear your take. So please leave a comment below. And if you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.